I've been in real estate for the past 5 years, so I'm just gonna lay it all out there into 5 steps that you could follow if you want to buy a home without a realtor. Step 1 to buying a home without a realtor is to get pre-approved. This ranges from submitting your pre-approval application all the way until you get your pre-approval letter from your loan officer. And ultimately, you should treat this as the start point for everything in this process, because until you know how much home you can afford, you are really kind of just shooting in the dark and potentially wasting your time when you go on the home search. So the way this is going to work is you're going to first select a loan officer that you want to work with. Your loan officer is a mortgage broker, so they're going to talk to a number of lenders in order to structure your financing. Now, this will be a hard credit check, so that's going to affect your credit score temporarily, but what follows that is a 45-day rate shopping window where every subsequent hard credit check does not additionally impact your credit score. Once a loan officer reviews everything that you provided them, then this will lead to becoming pre-qualified. Pre-qualified is just a way that you could show others like, hey, just given a service level analysis, this is roughly the home that I could afford. Following that, the loan officer is going to run the hard credit check and do their qualification process, which then leads to becoming pre-approved. Pre-approved is really what you want to be, because that tells a seller, I am approved for this amount of funds so long as your credit situation doesn't change. Right, and so this is actually kind of technically the last step of this phase, which is maintain your pre-approval. This extends throughout the entire duration of your home buying process, all the way until the deed is recorded in your name. Don't go making huge purchases, don't open up new lines of credit, just keep your profile consistent with when you submitted the application, so that way things don't fall through when you go to sign for closing. Literally happens. Like I've known people in the Army that will go and buy a Mustang for whatever reason the day before closing, and it completely invalidates their financing. All right, anyways, once you have this down, you're ready for step 2. Step 2 to buying a home without a realtor is to tour homes. This step starts with an online search for homes and ends whenever you decide that you're going to want to submit an offer. And this is probably the most accessible step to anyone now. With sites like Zillow or Realtor.com, being able to find homes that are listed for sale is really not a realtor exclusive thing. And because of this, buyers can oftentimes find exactly what they like, and they don't really need anyone providing a recommended list. Now, after this is when it starts getting a little nuanced. So there's going to be 3 primary ways to look at a home. Generally, the least ideal, you kind of do this to get an idea up front, is virtual tour. This could be a 3D model, 3D photos, even somebody that you know walking through the home and filming it. Obviously, if you don't have the ability to look at the homes in person, because let's say you live out of state, then this is of course the option you're going to want to go. The second one is open houses, and then the last one is requesting a tour specifically from the listing agent. First, we have open house, which I imagine to some degree you're familiar with, but this is when the listing firm or somebody on behalf of the listing firm will attend the house and open the doors for anyone to walk in and tour for a set period of time. You don't need an agent to do this, and oftentimes you'll see people that just live in the neighborhood that are curious about the home there. If you request a tour through the listing agent, then what they're going to do is they're going to provide either themselves or what's called a sub-agent to open the door for you and tour you around the home. If you go on the Zillow, you scroll down, typically after the first section and expand it, you'll find the listing agent name and contact info and firm. So if you call them, they could set it up on their end. And this is where it's appropriate to mention what's called fiduciary responsibilities. In short, fiduciary responsibilities is a license requirement for a real estate agent to put their client's interest above their own. Why this matters to you is because if you go to an open house or you request a tour from the listing agent, anything and everything you say that could be used against you in the negotiation table will have to get relayed to the seller. In other words, if you're not working with a real estate agent who's exclusively signed to you, then treat every single real estate agent as they're representing the seller. As soon as you start giving them any confidential information, they're required to give you what's called a working with real estate agent disclosure. Don't be surprised or sort of offended that they're putting paperwork in front of you. This is a North Carolina mandated legal requirement for real estate agents to provide to somebody when they start telling them confidential information, because now this starts to enter the realm of agency relationships. You don't have to sign it. They'll check a box saying they didn't sign it, but regardless, even if you do, this is not a contract, it's just a disclosure. Okay, so there's 4 more things you're going to want to do during this step before submitting an offer. First, uncover material facts, especially red flags. Material fact is basically a physical aspect of the home that represents its condition. For example, a damaged roof, a leaking pipe, a cracked foundation, things of that nature. What's really interesting is literally any agent that's licensed is required by the commission to share material facts. So you could literally go up to the agent and be like, are there any material facts about this home that I should know about? Now, if the listing agent doesn't know of any material facts, then this gets into a different category. They're not supposed to lie. Obviously they could, and this could be something that loses them their license, but that's why it's also important to be very diligent yourself, right? It's trust but verified. And along the same vein is going to lead us to the second thing you want to do before submitting your offer, which is estimate expected expenses. And by this, there's a number of things you could think about, like due diligence fees, earnest money. But what I mean more specifically here is the cost of repairs. North Carolina is what's called a caveat emptor state, meaning it's buyer beware. And it's just a fancy way of saying that homes are sold as is here. They're under no obligation to make any repairs, although oftentimes those get negotiated in. It still behooves you to do your due diligence now to look at what are the obvious repairs that are going to need to be done. All right, and so the third thing, and I mentioned this with the open house, it's gauge the demand for the home. Now, open house, it's fairly easy. Just look at how many people are going to the home. But if you're not at an open house and you're doing a specific tour with a sub-agent, or you're just doing a virtual tour, then this is going to take a bit more of a market nuance, and you need to understand both the seasons of real estate and also the specific area. And then the last thing is garner information about the sellers. This is a step that's worth including, although it's never guaranteed to bring specific results. And what I mean by that is, let's say you go to an open house and you start talking to the agent that's on duty. You could ask them things like, oh, hey, like, why are the sellers selling? And are they trying to sell by a specific time? That being said, they could literally share nothing with you, but it's still worth trying, and therefore I put it as a deliberate step before submitting an offer. Step 3 of buying a home without a realtor is to submit an offer to purchase, which becomes a binding contract. This begins with market research and ends whenever an offer is accepted. Up front, you have two options. Realistically, you're only going to use one, but you could either use an attorney to draft an offer. This is typically only seen with wholesaling, people that need very specific and unique offers. So even though it's almost certainly not going to happen, if you do use an attorney, you could pay for submitting an offer or putting them on retainer or paying for a legal form to be drafted, or of course just for their time. And then with the sub-agent option, they're going to go through a series of bureaucratic requirements, like putting the disclosure that I mentioned previously, understanding that you are just a sub-agent. They draft an offer to purchase, you fill it out. They're not going to give you any guidance or recommendations on what to do for the terms. You just, here you go, offer form, 2T, and fill it out. So regardless of whether you're using an attorney or just the sub-agent, you're going to want to understand the terms of the contract, the conditions, any addendum, disclosures, and then any additional terms or unique things that you want to include. And this particular part will keep you out of legal trouble, so make sure you're doing it correctly. Now, every part of the offer to purchase matters, right? It's legalese basically, but the key components is going to be the offer amount, due diligence fee, earnest money deposit, due diligence period, and settlement date. This is more or less outlining how much money is going where and when, and then how long you have to inspect the home, and then subsequently how long until the home closes and records and the deed is transferred to your name. And when you're coming up with these terms, like let's say the closing date, this is also another opportunity to talk to the listing agent and garner any information you can about the seller. And lastly, they're going to want to see that you're pre-approved for the amount of that home. And so if you haven't already done step 1, this is the absolute latest that you could do that. And at this point, your offer is either going to be accepted, countered, or declined. If countered, then react accordingly. If declined, then go back to step 2. Then if it's accepted, move on to step 4. Step 4 of buying a home without a realtor is to conduct due diligence. This step begins when the offer is formally accepted and ends at the specified date in your contract. As a general rule of thumb, you're probably going to have roughly a 14-day due diligence period. However, this period could be waived entirely or even just done in a couple of days. At this point, you're going to be flooded with information from the loan officer. You're going to be talking to an insurance broker or insurance company. You're going to be talking to your closing attorney and onboarding with that. You're going to be organizing all of your home inspections, pest inspections, and so on and so forth. While all this is happening, you're also submitting your due diligence fee and earnest money deposit accordingly. With this particular thing, time is of the essence, so I would prioritize submitting both of these up front, although doing it within 3 business days is reasonable. Now, whether you work with an attorney prior to this or you just talk to one, at this point, this is when you need to send your offer to purchase and all of its addendums and whatnot so that they can start onboarding you. From that point forward, you can just take all instructions from them. And then the same goes with your loan officer, which since you've already been working with them, you just give them the thumbs up, send them your signed contract, and then take all instructions from them. And then like I mentioned previously, you're going to be coordinating all of your inspections. The minimums that I would recommend is doing a home inspection, a pest and termite inspection, If you have a well, do a well and water inspection. If you have septic, do a septic tank inspection, possibly a cleaning. Depending on the date of the home, you might want to do a lead paint inspection. You could do radon or asbestos. And so the list kind of goes on and on. It can get a little confusing on what inspections you actually want to do. So at a bare minimum, you could talk to your loan officer, and depending on the type of loan, they will very specifically specify the minimum requirements for you. What's important is that you're collecting all of the notable repairs and compiling them into a request for the seller. The seller's under no obligation to accept these requests, but if they do, then they'll be repairing them after the due diligence period. In the event they don't accept any of these requests, then this just needs to be set aside for your budgeting considerations. All right, so while all this is concluding, you're also paying all the vendors that are involved in the inspection process. And concurrently, your loan officer might have already ordered an appraisal, which you might pay directly or just pay during closing. Now, since this could be a metaphorical hydra just growing heads as you start to do inspections, what's important is that you stay within your due diligence period. This is the period where you agree with the seller to conduct inspections. So if that needs to be extended, you have to request to amend the contract, which, again, the seller is not technically obligated to do this. And so this hits the last major financial point of the due diligence process, which is deciding whether or not you're going to commit to buying the home or backing out of the deal. If you back out of the deal, then your earnest money deposit gets refunded to you. If you commit to the deal and you stay in contract past the due diligence period, then that earnest money deposit becomes non-refundable. Now, there are exceptions to this, like a VA or FHA addendum or the seller breaching contract. And technically, you could withdraw at any point for any or no reason at all, but of course, then you don't get your deposits back. Step 5 of buying a home without a realtor is the earnest period. So this is the last step of the process, and it begins when earnest money is sent to the seller and ends when the deed is recorded in your name. At this point, you've committed to closing. And like I mentioned during the due diligence process, your loan officer probably already ordered the appraisal. Now, it's possible that the appraisal comes back during the due diligence period, but it's most often this will occur during the earnest period. So from the time that the appraiser sees the home, they have roughly a 10 business day time frame before they have to legally get you the appraisal report. And this appraisal report is probably the biggest milestone that can make or break a deal. From it, you're either going to be given the thumbs up and that you're clear to close. You could be given conditions that need to be fixed by the seller in order to move forward with the contract, or you're going to be declared tidewater, or in other words, the appraised value of the home is less than what it's being sold for. And that last part is especially important because lenders are only going to lend money based on the value of the home. For example, if you're doing a VA loan, 100% loan to value financing, and the home cost, I mean, this is not realistic, but let's just say $100,000, because you're not really going to find a home like that in Raleigh, but it appraises at $80,000, then that VA lender is only going to give you $80,000, right? So even though it's 100% loan to value, because you're buying the home at $100,000, you have to make up that gap. Now, fortunately, in this exact example, if you're a VA buyer, you have a VA addendum, which allows you to back out of the deal and you get to recoup your earnest money deposit. But let's say you're using a conventional loan, then this is a very serious consideration. And the worst case scenario is that you only had enough money to buy the home for the 20% down payment, and then now you're paying even more. And if you can't afford that, then you have to back out of the deal. And at that point, you're losing your due diligence fee and your earnest money deposit. Now, you could also use this as a tactic, right? During COVID, a lot of people were putting offers way over asking and they would just cover the gap. It was a very competitive time and you could still technically use this. You just need to be aware that that's a thing. So in the event that it appraises low, you could also attempt to renegotiate with the seller to change the terms. In other words, bringing down the purchase price. But like I've said many, many times, sellers are under no obligation to do this. So let's say in this case, you don't back out of the deal, the appraisal was either good to go from the beginning or you smoothed it over. So concurrent to all this, any of the agreed upon repairs that was submitted at the end of your due diligence is getting conducted. So you're going to want to be re-inspecting, reaffirming, and making sure that all of this is recorded in writing. Next, you're going to receive a final closing disclosure from your loan officer 3 days prior to closing. This is actually required by law, but it functions as your lender's way of providing transparency on your loan terms. And then technically, this is also the last available option to solidify which lender you're going with. In other words, you're not locked into one lender because you shopped for rates previously. But typically by this point, you've already narrowed it down to who you want to work with. So before closing, you're going to want to do a final walkthrough. Now, this walkthrough could be used to check on repairs and the condition of the property and so on and so forth, but what it's most importantly used for is that the property as outlined in the contract is even able to be conveyed. An example being if there was a huge storm and let's say a branch falls on the roof and destroys the roof, that's not in the condition under which you guys put the home under contract, and so that needs to get addressed. And even so, that's also your last opportunity to just back out of the deal if you want to. At most, you're going to want to do this the day prior to closing, but it's best practice to do this the day of closing. If you waive the right to do your final walkthrough, tree falls on the roof, destroys the home, you don't see it, you sign, deed gets recorded in your name, that is your problem now. So even if it's inconvenient, do your final walkthrough or find somebody else who can. At this point, you're going to reach the closing date, and this is the day that you go in, you meet with the attorney, and you sign all the paperwork. And then, of course, any cash to close was sent to the attorney prior to arriving. Once you sign everything, you're good to go, you leave the office, and then the closing attorney is going to notify you when they both submit the deed to be recorded and then when it finally records. Only when the deed officially records with the county is the home yours. Quick tip, make sure your insurance company actually knows you closed on the home. You're not going to want any period where your home is not insured, or else that's a massive liability to you, right? And there we have it. Congratulations, you're a homeowner. So here's the most important takeaway of all of this. Be thorough and be safe. And obviously, I'm a realtor, so I help people navigate this process and make decisions along the way. Nonetheless, these 5 steps are enough to get you through the home buying process. And then in a guide like this, just know that it's impossible to cover nuance, right? So if you're ever running into any legal questions, then you need to talk to an attorney. Or if you're running into any loan questions, talk to the loan officer. Insurance questions, the insurance broker. And this is true for any aspect of the home. Just talk to the right professional. Now, in the event you do work with a realtor, just make sure that you're screening them for compatibility, right? Because even if it's a good realtor, if you two don't get along, then don't work with them. Or if they don't communicate the way that you need to be talked to, then don't work with them. And if you do find a realtor that you like, then just make sure that you both hold each other accountable. Realtors got a bad rep, especially during the COVID era, when the barriers of entries were fairly low and the demand was super high. That being said, having the right one is going to help you make better decisions and save money throughout the process. All right, so with that, whether it's to work with a realtor or just any questions in general, always feel free to reach out to me. My contact info is provided. And thank you. I'll see you next time.